Okay. I hope everyone is fine. We're good and ready to continue with our class. Yesterday we got interrupted a lot by network, and there was a part that we did not finish on the Fibonacci indicator or Fibonacci tool. We looked at most of the parts, or most of the things I shared with you, most of the areas that I felt was necessary for you to know as you use the Fibonacci tool. But then the parts we didn't so much go into was the part of making entry, how to preset, how to establish margin call drops, and how to tell if the trend is continuing or it is showing a possibility of a reversal to the opposite direction. So that is the part we didn't share yesterday, and I'm hoping that it's what I'm going to use today's time for, and then we conclude. Then possibly tomorrow I may wind up on another some other indicator. Tomorrow being a Friday, yeah. Then we see how we get through the weekend. So I hope I am audible enough for everyone to hear me loud and clear. Mic clear? Can everyone get me rightly? Loud enough? Please, I gotta have a feedback, please. If I'm clear, or if the network is again choking me like yesterday. I need to be very sure before we can move on. Let me know. Let me know. Let me know in the comment section or in the chat if we're still together. Yeah. Okay. All right. So I'm going to share my screen and then we pick up from there. Okay. Trying to pick this and it's just not going clearly. Okay. Okay. Yes, happy to have everyone on the call. I think I had not recognized you guys. Happy to have every leader on call. Happy to have everyone trending with the bot on call. And I'm happy to have all those who are hungry to learn. Yeah, that is one thing that energizes me if we have community of people who always spare time to learn. So I'm glad to have all of you on the call today. Let me hope you guys can see my screen. I wanna come back here and we go through. I'm gonna use one coin. Let me see. Okay, let me use this. Let me use this one. So just a quick one from what we shared yesterday. We said what you need to know about the Fibonacci tool are actually the following. One, we said the Fibonacci indicator or the Fibonacci tool itself has two versions. There is the manual one, and then there is the indicator. The indicator adds itself automatically upon choosing it from the list of the different indicators. So it adds itself automatically on the chart. And by so doing, it automatically locates, it identifies the trend, okay? It identifies a trend, and then from identifying the trend, it then draws and captures the different fib levels from that chart, upon which you're going to use to predict what the next movement is going to be. But then when it comes to the money one, it is up to you to identify a specific trend of interest. You identify a price movement, okay, that is intended for a particular direction. And then you identify your key swing high and swing lows. Then, depending on what the direction of the trend is upon identification, if it is an uptrend or a rising market, you'll be connecting your swing low to your swing high. Then automatically, upon releasing the tool, you will have those fib levels established for you, all right, indicating the different price reaction zones. If it is a downtrend, you will have to connect, you put your fib tool from the swing high identified, then you drag it to touch your swing low. And then upon releasing it also, you'll have automatically the different fib levels established for you. Then you're now going to depend on the fib levels to decide as to whether you can make entry at current price or you can set a preset. All right. So it's from then that you can decide on whether you should make entry or you should hold on. Now, what you ought to know is within the fib levels, okay, out of the different fib levels, the key fib levels that you should always pay so much attention to, in which in most cases, the retracement or pullbacks tend to arrive at, and then there occurs a reaction to maintain a previous trend, are actually three. These are the areas you need to pay attention to. Number one, you have these three, okay? You have the 38.2% fib level, you have the 50% fib level, and then the 61.8% fib levels. All of them are levels of pullbacks, upon which once price pulls back to, there is always high chances of it reversing and then maintaining the previous trend. If it were on an uptrend, you will see a 100% movement, which is going to be monitored by this fib indicator or tool, and then it will have to retrace. Now, the retracement most at times happen on these three key Fibonacci levels. One being the 38.2, one being the 50% fib level, and then also the 61.8% fib level. And yesterday, I also said that sometimes the pullback goes all the way to the 78.6% fib level. However, most at times once it does that, it is literally not a pullback intended to maintain this previous trend, but rather it may be more of like a trend reversal. It will be more like a market structure shift most at times, okay? Most at times, it is a market structure shift because most often once the pullback occurs to the 78.6%, there is always a tendency of a failure swing happening, okay? A failure swing is a scenario where the price pulls back and then as you expected it to rise again or gather momentum, or upon gathering momentum, it should rise and break the previous structure or resistance zone. It doesn't actually reach the resistance zone. Before you know it, it just shifts direction and then it goes about in the opposite direction. So most of the times, there's a lot of failure swings that happen when the pullback comes to the 78.6. So it wouldn't be a level that personally, I would rely on so much as making entry, especially if you want to buy or you want to take a long position. Yeah. And if at all you're going to, then most at times make entry from that point and then take profit to this level. And rarely you take it to the 50% fib level, but concentrate on taking profit within this range of the 78.6 and then 61.8. All right, because most likely there's a tendency that, or there are chances that the price is going to go to the opposite direction. And I want you to try out this, okay? Don't just hear it from me. Go and upon finishing up with this class, you try to use the fib tools accordingly and monitor the market and see what it happens and have your own experience. All right. Okay. So these are the key fib levels. Now, how do you make entry? The best way of making entry is upon if you're going to use the fib indicator to monitor the market, to look out for entry opportunities. Let's take, for instance, we want to go long, or you want to buy. You're a sports trader and you just want to buy and take profit once the price or the value of the asset rises. You are going to encounter a rising trend like this. All right. Now, if in the process of identifying your trend and it is a rising trend, once the 100% movement is achieved, you've already seen that there's already a well-established swing high, all right, from the swing low, and then the price is tending to retrace. The best thing you're going to do is you set your preset around that 38.2% fib level, okay? If upon establishing the fib indicator on the chart and then you find out that the price has already dropped to the 38.2%, but it's showing a sign of dipping below, then you set a preset price at the 50% fib level. If it comes to the 50% fib level and it shows sign of continuing to the 61.8, set your preset around there. Now, what happens here? If you set your preset around here, don't rule out that aspect of the market price dipping below the 38.2% fib level. Don't rule it out. The best you're going to do is, if this is your preset price, or the price, this is your preset price, sorry. If this is your preset price, which is at the 38.2% fib level, make sure that you also then measure the distance between this 38.2% fib level all the way to the 61.8% fib level. But in the midst, in this middle, okay, in between here, measure these respective distances from 38.2% fib level to 50% fib level. That should be a margin call drop, okay? Then also the 50% fib level to the call drop. So roughly you will have an estimated call drop of about 6.6, almost close to 7% drop. Now, in most cases, if you see critically, in the settings that I tend to share with you when you're setting the parameters of the bot, especially on the margin call drop, I normally recommend that you establish a margin call drop that will first take care of a 7% call drop, okay? A 7% drop in the market price. If you do that, then you divide the margin call drop in the order of increasing number. I shared this some times back, okay? We're already familiar with this. If the first call has 1%, the second call should have a higher figure, maybe 2.5 or 2%. Then the third maybe should be at 3%, like that. But it should cover around 7% drop. And this 7% drop should be within the first four. Let it be within the first four. Sorry. Let it be within the first four margin calls. Okay. Let it be within the first four margin calls. So you distribute the 7% drop within first four. Don't open your fifth call yet. The fifth call should be the last resort, where now you're seeing the price is again abnormally going against you, so you want to take advantage of the dip or of the drop so as to benefit from the sub sales. Okay? Yes, that's when now you open the fifth call. But normally your margin call should be always within four margin calls only. Create it within four, right? So the 7% should be within the four. You distribute it within there. Now for other case scenarios, that's when now you open the sub bin zones, so that you're looking at a scenario where you now want to take some profits within the sub bins. Okay, that's where now you want to take some profit and take advantage of that. For every slight movement in terms of retracement, you'll be taking profit. Okay, so that's what you do. So if that is the case, that's how you're supposed to establish your entry. The price is coming. It has not yet reached this zone.
Good morning, everyone. I think it is the network. Musa, your network is breaking.
Okay. We shall learn. And if the network misbehave, we shall continue learning. We break, we come back. I think I need to vote. If I had the power to lobby, I would really lobby for these people meeting. If not, I demobilize people from using the network this side. Now this one here is saying I never have network, but it's not my problem now. It's not my problem. I always try to look out for a better location. So sometimes maybe I may be prompted to move out of my house, but I know it will be okay. Don't worry. Yeah, my network is always just that. I think. Hmm. Okay, let's continue. I hope the network is okay now. I hope I'm clear. I'm loud. Yeah. I hope I'm okay. Is it okay now? I've always told these co-hosts that in case my network is not clear, in case I'm breaking, they should quickly alert me in the feedback. Or they open the, say, you know what? so that really people don't miss out, okay? Because I may be thinking I am passing information, yet I'm really off. So it's always very important to notify me, okay? The co-host. Yeah, that's why we are there, to always, to support and alert one another so that nothing goes wrong, okay? Otherwise, let's continue. Let me share my screen again. So I believe that part is clear. I hope that part is very clear. That part is clear. And so the second thing is, if at all in the process you came across when the price has already moved below, is moving below the 38.2% fib level, you set your preset at this zone, okay? So if you set your preset around that zone, then just measure. Your eye should be directed towards the 61.8% fib level. You will know that if at all the robot buys at that level, there is a likelihood that it is still going to drop further. And if at all it does so, then the 61.8% fib level becomes your next destination where you would want the robot to buy, right? So it's very important you do that. So you measure that percentage, okay? You measure that percentage, 3.6. This other case scenario where it dips below the 61.8 towards the 78% fib level, 78.6, is now a rare case scenario. That's why I'm saying if it buys off that level and then it still continues going down, you're gonna measure. That's when you open the other fifth call. You go and try to adjust the bot to cater for the fifth call now. That is where now you're entering a zone of a possibility of a continued downtrend. All right. So that's what you do. That's what you do. That's how you make entry. Now, if the price, if you had if you came across a downtrend market, because now we have future traders as well, those who trade futures, I mean, you now have a downward trend. You're simply going to connect your swing high to your swing low, right? So you draw it from up. Now, the best thing you're going to do is, if you want to take a short position, if you want to take a short position, remember there's already a 100% movement that has been monitored or tracked, okay? Now you're at a 0% mark. Now, once it hits the 0% mark, you're going to expect a retracement, right? A pullback. Now, this pullback is going to be either on the 23 or 38 or 50 or 61.8. If at all this trend is supposed to continue, you should expect a pullback. And this pullback will happen in those key fib levels. That is either this or this or that or that. But the major ones being the major ones where in most cases the pullback tends to go to or react to is these three. Okay? These three. All right? So just like I said, if you want to take a short position, all right, or a sell position, if the market price comes down and then you see a sign of it reversing or retracing or going upward, you should know that what it is doing is a retracement. Now, being a retracement, you will set your preset around there, such that if the price rises to it, okay, the bot can buy, okay, or it can open up your position. And then if that is the point where upon touching, it reacts to it and then begins to go down, then that means upon buying, you're going to have this other next movement. You get that? Now, what you're going to do is, if you set your preset price around this zone, then measure this distance from here all the way to this level, and then set them as your margin call rise in this case. Okay, we'll call it call drop, but it will be a rise, the opposite of the drop, right? Yeah, so you're going to measure this, and that is what you're going to set as your margin call drops. Okay, you're going to measure, you measure this percentage from here, from point of entry or where you set a preset up to this area. That is 61.8 fib level, which will be roughly 6.9%. Such that in case it buys here and then it still continues to rise, you have the bot buying from that area and also buying from that area. So you have two buy areas, all right? Yeah, so you'll buy at those different areas. Then if at all indeed it is a correction intended to maintain this other previous trend, okay, you will automatically see if the price rises to those zones, upon the robot buying all those levels, you'll see the price again now beginning to dip with an intention of coming to break this zone to have a continuation of the previous trend. So that's how you identify a selling signal, okay? Still, you can decide to make entry at current price in both of the direction. But as you do that, your interest should be in identifying these key fib levels because it is going to help you measure and establish your margin call drops, okay? It is very important, okay? Now, just like I said, in case you realize that the price has already moved past the 61.8. Remember, it was in this movement, and now it is reversing, and it has moved through all this level. It is now heading for the 78.6. You should have now, it should now, the chances of a reversal should shift from 50 to maybe 30%. Because once it goes there, it may be a sign of a trend reversal. The next movement, you'll actually see it heading towards the 100%. So the chances should no longer be 50-50. Okay, it should now shift. It should shift towards a reversal, but not a retracement. Okay. Okay, so let's come back here. Let's come back. Let's try to use this. Let's try to use this as an example. The current trend we are seeing here. Okay, so now let's draw our fib indicator and we try to analyze this coin. So this is the area of concentration. So I'm going to capture the movement maybe from, let's say, from here. Let me capture the movement because it was like this, then it came down, and then, so I'm going to capture the movement. So this is going to be my swing low, and then this is going to be my swing high. So since this was an uptrend, okay, I'm basing on an established trend to see what happens next. So I'll use this, I'll drag it from, I'll put my fib level, so the fib tool on the swing low, and then drag it to the swing high, all right? Okay, so are we still good? Are we still good before I do that? Are we still okay? I don't want us to. Are we okay still? Did you understand that part? Okay.
Yes, but I wanted to ask, is it in 15 minutes time frame?
No. We have not talked about the time frame as yet. We are going to come to the time frame. It's on any time frame. This analysis can be done on any time frame. Okay? It can be done on any time frame. It's you who chooses the time frame. Yeah. Yeah. So we're good. Now let's continue. Let's continue. So let's come back, and so we're going to draw our fib tool. Let's see, because we want to see what is going to happen here. So I'm going to mark. This is my swing low. I'll put my I'll put my line there to mark it there. Then I'll also pick here and put it there. So that is the zone. I want to draw my, this is the area where I want to concentrate in. Okay, so if that is okay, I'm going to pick my fib retracement tool. I put it here, and then I drag it to my swing high there. And there we have it. There we are. So let's check, let's look. Okay, you see this? This is where we are. Now, what I want you to know is this. There's this other smart money concept which I want to incorporate here. Okay, let me just literally make it a little bit plain. If we had this kind of movement, this, and then we have that, pullback, and then we have that. And then we see this kind of movement, all right? If this movement comes and then breaks this zone, let's check this. The price moved from here to that part, to that area, right? From the support to the resistance. Swing high, swing low, right? And then we expect it to retrace, and it did so. And the retracement were at this zone, right? Now, if upon retracement, the price attempted to rise, but in the process of rising, remember, this was the trend we are trying to monitor. It is the trend we base on to draw our Fib retracement, right? And we know that if a pullback is successful, we expect the next movement to come and break structure around this zone, to break this level, so that we have a continuation of this previous trend, okay? But in case that does not happen, let's check it out. From here to there. If the retracement was to this zone, then an attempt to rise happened like that, but then we did not reach the resistance zone, but rather we stopped midway, and then we had what we call a failure swing around here. There's a space where the price did not cover. Then we saw a reversal, and this reversal came directly and broke the zone that supported the retracement. This is a trend reversal. This is no longer a continuation of the trend, and it's not going to happen. It means the price, the market price has reversed. The trend has shifted direction. It's no longer going to continue up. It's now going to come down, because the next movement, what is going to happen next is this break of structure. That means it is going to head for the next support zone. Then it will come and retrace the point that was, it will come and retest the area that was broken, and then it comes and breaks the next structure and continue down. So this is a sign of a trend reversal. So you're bound to see that on the chart. Even when you draw, you should pay much attention to what happens, okay? And that understood, the same scenario is going to happen if the price is if the market price is pushing for the downward movement. You're going to have something like this. From here, the price will come down. You expect it to retrace, and it does so. And then the next movement upon retracement, this build up here, the momentum, is intended to come and break this zone. But then what happened? It dropped slightly. It didn't come back to the support zone, and then shifted direction like that. So it definitely means that this was the zone. You expected the price to come and break, but then it did not. It came right from somewhere there. And then now what happens here is you're going to have a scenario like this, that it retraced to this zone, okay, retraced to this zone, and then there was a break of structure rather. So a failure swing happened, okay? It was on a downtrend, a retracement happened. This was intended to come and continue or maintain the previous trend, but then it failed. That was a failure swing. So a spread created here. There was a shift in direction. The next movement came and broke the same level, which resisted the price.
I think we have lost Arobas, our coach leader Musa. So ladies and gentlemen, may we have the patience. He will be back. Thank you. So leader Musa, you are off.
Okay, I'm back. Somebody called me. So and affected the network. Okay. Am I okay now? Am I back? And okay. Let me just switch off that line first. Oof. And let me block the contact and then later on. Okay. So am I okay now? Am I clear now? All right. Sorry about that, please. Let's continue. Okay. I hope you understood that part. I hope that part was okay, was clear for everyone. It was clear how you tell whether the trend is intended for continuation or a reversal. I hope you got that part very well. I hope it is okay for everyone. Okay. I would trust it was okay for everyone. So let's come back here. So this is a scenario we are going to encounter, okay? We're going to encounter such scenarios, these two scenarios on the chart, okay? Now, let's come back here. Let's come back. We're saying we're going to draw this. So let's try to check through this movement. I want us to see something here. On this chart, let's try to see this movement. We track this movement. This is how the price is moving so far. From here, from here, is my network okay? Okay. We are quiet. That's fine. Okay, so I wanted us to monitor this movement. So from here, the price rose to, why is it like this? From here, I want to monitor, came here. Then we had the price drop to 50%. I don't know, do you see this? Can you see with this? The price dropped to 50% fib level, and it is attempted to rise, and this is the farthest it could rise here. This is the farthest it could rise. Okay. And that level. And now, this is what is happening. At the moment, what is supporting this price is the 38.2% fib level. That is what is supporting this price here. Here. See that? Now, should this candle this trading session, should the candle break below the 38.2 to the 50% fib level, and then possibly below the 50% fib level, maybe to this area, okay, you forget about a rise. Forget about, why is this? See this, what is happening here? From here to here, then it pulled back to the 50% fib level, and it tried to retrace. It tried to rise again in an attempt to go and maintain the previous direction. But it seems like there is already a failure swing here. Now, if should this candle here close below the 38.2%, and then the next candle opens and then also comes and closes below the 50% fib level, we are heading for a downtrend. Okay? We are most likely going to head to a downtrend. Okay? However, just like we say, most of the times we may not use it as a confirmation indicator. We have just incorporated one tool. So we want to see what is happening with the other tool, support tool, right? This is already a little bit of the picture you should expect. This is what is most likely going to happen. Yeah. Unless it closes above the 38.2, okay? Unless this price closes above the 38.2% fib level, and then the next candle opens and closes above, okay? Maybe a build-up of a candle comes here and then it breaks this zone. If it breaks, then we shall be under a continuation. Is that okay for everyone? Is that okay? Is that okay? Is that okay? It should be okay. Should be okay. Now, so that is with regards to the current trade building up. And then let's come back to this. So, okay, so let's come back here. So this is, we should now pay attention to what we're seeing here. Most likely, this is what is going to happen. But still, if you want to take advantage and benefit from that next scenario, when the next candle is gonna. Okay, so here, let's see for what happens in the next trading session, okay? This is a 1 hour time frame. Let's see what happens in the next trading session, but that is the likely possibility. But if this level is able to hold this price and the next candle opens from there and closes above, then we are going to see that movement, and we should expect some good movement, some good percentage from around that zone. We could see ourselves heading for over 10% in the course of the day. Over 10%. And I tell you this, if this happens, if the scenario happens like we said, then expect over. And if a breakout happens, then we are going to go for over 20. All right? We may go for over 20. Yeah, because it's very important for you to know this, that even above this level, the fib level, we have imaginary resistance levels above, okay? Above this level, okay? If the breakout happens, we have imaginary resistance points there, which we can still establish using the fib retracement, okay? Yeah, but in the look of things, that is what is going to happen. So if we decide to enter at current price and see a possibility of what is going to happen, then measure from there to this, then from there to this. you take them, treat them as your margin call drop percentages. So you take the margin call drop percentages of the two zones and set it on your bot. Let the robot trade if you enter at current price. Okay. Yeah. So that's a rising market. Let's look for another coin possibly that is having a sign, that is showing a sign of let me see which coin. Can I go for Solana? Let me see Sol. Where? Now Sol here. Solonana. Okay, let's track this. Solana is building. So let's capture this movement from here. We captured this to this level. Now this is the perfect example of what I was trying to tell you initially. See this movement? This pullback was up to close to around 78.6. Okay. So as I told you, it's a great pullback, but occasionally, once that happens, you're going to see a great pullback. I mean, a great trend establishment as well. But if it breaks above, if it had broken above the 78.6, then that is already, the next movement was going to be there to achieve another 100% movement from this area. It will be 100%, which in that case, it would mean that the trend has what? Has changed. But since it pulled back to that zone and then it did not close above the 78.6, there was this great movement, an attempt to maintain this trend that was established. Now you have this, okay? You have that movement. Now, the next thing you're going to do is, if you want to look out for the next entry opportunity, you'll have to wait for this trend to fully establish. Now, if you see the next bullish candle, all right, then you're going to consider the low of this candle as your swing low. Then this will be your swing high. So you are going to draw your fib retracement on that movement to track through where the possible pullback is going to be for the next movement in the downward direction. Okay, so that's what you do. All right, so that is the manual. Let's see if we had put in the auto one. The auto one is simple. For it, it draws the line automatically for you. So let's see. Let's just look for the auto fib, and then we add it there. There we are. So for the auto, this one here tracked this movement right from here. So for it, it is tracking this other previous movement. Okay, to track to this previous movement. You see? So basing on the previous movement that it has tracked, that means we are just in the process of retracement. So the price is already at the 38.2% fib level, which is very, very beautiful. You can decide to make entry there so that not to miss out on any chance of a rise after the pullback. But then if you don't want to enter market price, you can still set your preset at 205.83, which is this fib level, because it is still going to drop and touch on it before it picks up any movement to the opposite direction, if in case it's going to do that. But if you don't want that, then you can come and set your preset at 203.61. All right. Now, if you do that at current, at the first preset area or zone, you're going to measure this distance from here to this. That becomes the margin call drop for the first call. And then you measure also from there to this, becomes the margin call drop for the second call. And then you measure from there to here. That becomes for the third call. Okay, in the order of increasing figure. All right, first a 1, then a 1.1. Now you are in a 1.5. That's how the spacing goes. That's how normally that happens, and that's the magic behind the distribution of margin call drop. It should be in the order of increasing number. It doesn't have to be a uniform number. Okay, so you would just do that, and then you wait in case the market price if case the bot buys around there and then it still continues, once it drops to this level, the robot will buy. Once it drops to the next level, the robot will buy. It drops here, the robot will buy. So it will continue buying the different levels, just in case it continues dropping or going down, all right? If you want to enter at current price, still, that's fine. Enter the market price, drop this percentage, okay? Create this. Still, use this fib level as your support zone. That is roughly 0.27%. So that will be the first call. Second call will be 1 point, will be 1 point what? Second call will be 1.05. Third call will be 1.11. Fourth call will be 1.5. And that is how you'll go. As simple as that. Okay? Then you're going to measure. You're going to measure this percentage. From here, you're going to take profit to this zone. You're not going to assume that it is going to break above the 23, right? For you, you are taking profit within the zone. So you take 1.08%. If it goes above that, then you can think of making an entry later on, okay? And take profit to this zone, that, okay? So as simple as that. But then you need to confirm that indeed the pullback that is happening is going to be a pullback that is going to be intended to continue the trend. And how are you going to do that? You'll have to add in other indicator to see at what area or what zone is the market now with regards to this Sol coin. Now, if I add, for example, an indicator that shows an overbought and oversold region, it will help us a great deal. So you can add in there and see at what area the market is, so that you increase your level of confidence on decisions as to whether to enter at a preset or at current price. So let's add stochastic RSI and see. So basing on the stochastic RSI, you realize that we are already in the oversold region. We are in the oversold region. So we have at least a certain degree of confidence that even if we entered current price, we are good. Even if we enter at a preset around the 38.2% fib level, we are equally, absolutely good to go, because this is where we are. We are in the demand zone. So sooner or later, a number of traders are going to begin demanding for Sol. And then as they demand, they're going to trigger a momentum buildup for the price to rise. And we shall take our 1%. As simple as that. Okay? As simple as that. Now, you may want to add probably maybe the third. Or maybe you want to add in the MACD to see, is there a possibility of a crossover? Where has the crossover happened? Has it happened already? And if it has happened, is it within the negative zone or the positive zone? What about the momentum? Is it increasing or is it decreasing? Is the negative histogram tending towards the 0% level? Because that should communicate that there is an increasing momentum, a build-up for demand of the coin. But if it is the opposite, then you may wanna take this decision of entering at preset. So let me see if I added let me just remove this. I'm using the free version, so I'm gonna remove one indicator, because the indicator allows, the free version allows for only a maximum of 2. You can't add the third. So let me remove the fib, and I'm gonna track through using the the manual one, since this is where it started from. Let me just draw it there. So here we are. Okay. So we have that. Now I'm gonna add the MACD. Let me just add the MACD and see what happens there. Now with the MACD, now see what is happening with the MACD. See what is happening with the MACD? Our MACD line is still below the signal line, and they are pointing towards the 0. It's actually telling us the trend is on a downward movement, right? And we can actually ascertain that by the progressive increase in the sizes of the negative histogram on the MACD. If you can see here, there's a progressive increase in the sizes of the negative histogram away from the 0 mark. Now, this one should tell us, guys. Now, this one should tell you that, this one should inform you that it would be better if you make an entry at a preset. Possibly you may have to wait a little. Set a preset here. This would work out 205, and then you just establish margin calls, okay? Or you could even wait for this zone, all right? But better still, even at current price, it is still well. Possibly the builder, because now the MACD tend to measure, it is a lagging indicator, all right? It tends to capture this information later on. The fastest being the stochastic. For it measures in real time, right? For it goes along, it plays along with the market behavior in real time. But this prints out with a little bit of lag. So probably as you enter market price with margin call, you'll be good to go. All right. You'll still be good to go, because at least we are not in the bad zone. Okay. On our fib retracement, we are in the right zone. With our stochastic, we are in the right zone. Now it's up to us now to see what later on the MACD would communicate. For it, it is slow. It comes in slow but surely. Okay. But at least we are there. You know where to establish your margin call drop percentages. I mean, how much to establish as your margin call drop percentages. You know how much to establish as your drop, and then you're good to go. Okay. All right. So I hope that is okay. That has been helpful for everyone, and possibly that's where I'm gonna end for today. Yeah, I'm gonna end. So if what a point. So so let's I hope that is the much I could share for us now. So are we okay? Are we good to call it a day? Any question in the next 2-3 minutes? If there is any question, there is any question, I'm glad to answer them.
Yes, Coach, good morning.
Good morning.
Yeah, this is Tom from Uganda. What I wanted to ask, like when you are on Solana, when it had retraced, there were so many other candles in between. What made you to consider the last candle? Why didn't you look at these other candles that were in between? What informs you what informs you about the starting point and the end point when you are putting those the fib tools? That is still my sharing. The area of concentrations, how to select the area of concentration.
Okay. All right, thank you. Now, about the choice of areas of concentration is entirely on you, by the way. There's no fixed procedure or a recommendation. It is you who chooses an area you would want to put your focus on. Because the chart is broad, it's really big, you can't concentrate on the entire chart. You must pick a specific information, but most of all, the most recent information is better off. All right? The other later information or the earlier information now helps you in the event that, you know, the market price moves away from your zone, the demarcated area. It's now moving to either a higher zone or a lower zone past the area you had already demarcated. That's when now you scroll backward to look at, you know, after identifying certain area, you want to see how did the price react with reference to some of those other areas. Like I want to share, let me show you this. Let me just try to go and do this. And like in this case, let me just, so let me go to jelly before I can come on that one. Let me go to jelly. You see, for jelly, at the moment, okay, jelly. Let me use Solana. Okay, let me use jelly. Now, for now, we are demarcated this. We have demarcated this area as the area we want to focus our attention to. This is the area. Now, meaning, with reference to the market price, I am going to concentrate only within this area. I don't know whether I'm making sense. I'm going to concentrate only within. I'm going to see this price reaction area. This, that. Because I'm making reference to the market price. Okay? I'm making reference to the market price, so I have to concentrate my attention here within this reaction zone, where prices, upon approaching, there was a reaction. Okay? If it was going down, it reacted by moving up. If it was going up, it reacted by coming down. Like a price reaction zone. Because we said that a reaction zone can be an area where the price will either break above, or it can be a zone that is going to reject that price from continuing in the direction it was actually following. You get that? So you just demarcate a zone, okay? That will give you at least some few areas of price reaction, okay? Then you based on those areas of price reaction with reference to your market price to now analyze what the possibility of the future movement is going to be like. So there's no fixed, principle that you have to follow. But then another thing is, if now the price breaks above this zone, it leaves the zone already. Let's assume the price now drops all the way below. Maybe it comes to this area, comes now, and it comes all the way maybe around here. Now we are not very sure where is the possible price reaction zone or the support that may support our market price and prevent it from continuing to go down. We are not yet very sure. But now, to ascertain where exactly our price reaction area is, because the price is already heading for the downward movement, we have to go back in history and see and try to use the past data to try to locate this price reaction zone. You get that? Like, for instance, if price had already broken below, okay? Let me just use this. Sorry. Let's say the price already came down, okay? Now, we are not sure where it is most likely going to encounter a support, all right? What we're going to do is we have to now go back in history and try to identify some of those key support zones, okay? Price reaction zones. And if I come here, I'll say, okay, based on where the price is, this is where our price is, okay? The price is already here. Now, let me see, where is the possible support zone? I'll come back in history and see that, okay, there's this point. This was a reaction zone. There was this point. It was a reaction zone. So I'm going to pick my line and mark that zone. It becomes my point of focus because that is where the price is most likely going to encounter a support. That is the next. Then I may go down again and check for the next. I will see that this is another reaction zone. And then finally, I can take the fourth one to be this. You see that? Now, from up there, we were concentrating there, but now price left that zone. It now came down. Now, by coming down, do you know what is happening? We have to identify those possible price reaction zones. So our attention is going to shift from up there to this area. Does it make sense? To this area. So if at all there's anything we're going to do, we are going to do the same thing we did there around this area. We are demarcating it. So we want to see how the price is going to react on the different zones we have identified, because it has already approached that zone. So we want to see what is going to happen. Okay? So does it make sense? Does it answer something? Does it answer you? Does it answer you? Anyway, we have a question and answer sessions. I think I don't know, I'm seeing the timetable. Maybe that is the time where some of this information will be broken. But just in simple terms, that's what happens. Okay? You shift your attention depending on where the price is. So the price is going to guide you. The market price is going to guide you on the area you're supposed to concentrate in. Okay? And maybe reflect the past information. Reflect on the past information to help you picture what is going to happen in the future. Yeah. So that is that. Okay. Jelly isn't good for short. I mean, I already told you we analyzed together. I'm saying you have to wait for what is going to happen here. A possibility of a rise if it closes above. Okay, that's what I told you. That if it closes above, that means that zone, the 38.2, is going to support the price. So we're going to see it going up. And I think we are seeing something happen. Let me see. Let me share with you the screen and we see. Let's see what is happening. Just see what is happening. This is what we analyzed. Here we are. I told you if that candle, that session closes above, and then the next candle builds up towards the 23.8, it may be a possibility of a continuation. That's what I told you. Okay, because we already tested the 50% fib level as we were retracing. So we were struggling, the price is struggling to go above or to continue up. So what is going to happen is with this resistance at the 23.6% fib level, making the price to reverse slightly towards the 38.2, if at all this session here, the candle building up in this session, closes above the 38, and the next one comes and breaks the 23, then it is a continuation of this trend. That is what I explained. Okay? Because if you check on this stochastic, we are also still on the oversold region. We are in 1 hour time frame. And when you go to the MACD, it is literally telling us something as well. Yes, it has the MACD line has crossed below the signal line, and the momentum, the strength or the momentum of that movement was, witnessed or was recorded here by this histograms, the negative histogram, but anything can happen because it builds up slowly. What tracks the price in real time is the stochastic RSI. This one builds slowly. By the next time we are going to see an approach of the MACD towards the signal line to cross over, here would already be maybe in the middle. We are already in the upward movement because it is tracking it in real time, right? We would already be up. The crossover will already have happened on the stochastic. So it's just a matter of paying attention and following what I shared with you. That principle that's what you need to know. Only. Okay. And for me, for this coin, it is good. It is good. Me, I'm seeing it is most likely going to have some. Let me see in 4 hours. It is showing beautiful sign. It is showing some beautiful sign of some 10%. It has some 10% something. It's good. I tell with most of you who like trading 1%. Now that one you can easily achieve.
Coach,
Look at
pardon
this.
me. Please, between 24 point something percent there, should we long it or short it? Sorry, I came
Now,
late. I apologize.
okay, you long it
Yes.
now. You long it with and take
Okay.
one and take up to 2%, 2%, 2.5. You long it. Yeah, this is
Okay.
good.
Then
This is
afterwards,
beautiful. This is beautiful. It's gonna happen. It's gonna happen, guys. Hey, it's gonna happen.
right?
Okay.
2.5.
Yeah, 2.5 is good. 2% is good. 1.5 is good. All right. But with some margin calls. Let me see. Let me see margin calls. Oh, this is good. This is absolutely good. Because if I'm seeing in 15 minutes, hey, we are like that, then it is good. It is good. Because this is beautiful. It's beautiful. It's good. Someone cannot fail to get 2%. Let me see if you're taking it within the range, entering at current price, taking it within the range. This is up to around 3%. We are taking it within the range in 15 minutes time frame. All right, guys, go and trade. I think I may have to end here. I want to go and make some money. Yes. Yeah. So let's meet possibly tomorrow, and we see what happens. So over to you, my great leaders, coaches, Doris Angel, Mopiwa, Manuel, Preshi. Happy to have you guys on board. And I don't know if you have a word or two, possibly, and then we can call it a day.
All right. Okay. So thank you so much, Coach Musa, for your time and the knowledge impacted this morning. Okay. So I guess we still have another meeting in the next 1 hour. So we will end here and we will meet in the next session. Thank you so much and God bless you. All right, guys. Let's meet in the next session. God bless us all. Good morning.
Okay.